Have you ever felt like the stock market is this, I don't know, this exclusive club you weren't invited to? It's just full of confusing jargon, and from the outside it seems incredibly complicated. But what if I told you the core ideas are actually pretty simple? Today, we're going to strip away all that confusion and give you a clear, simple place to start. Let's dive right in.
Okay, so first things first, we have to talk about the fantasy. It's powerful, it's super alluring, and honestly, for most people, it's their very first introduction to the whole idea of investing.
You know what I'm talking about. You're just scrolling online and then bam, you see it. A screenshot of some massive one-day profit. Someone's claiming they made a fortune literally overnight. And that little voice in your head starts whispering, hey, why not me? I could do that.
It's a fair question, isn't it? I mean, if it were that easy, wouldn't we all be doing it? The thing is, these flashy posts are designed to do one thing, grab your attention. But they almost never, ever show you the full picture.
So, here's what those posts conveniently leave out. That $50,000 win? Yeah, that might have come from risking $500,000. What you don't see are the years of study, the countless losses along the way, and the very real fact that this might have just been a one-time lucky break. The big takeaway here is simple. Context is everything. All right, so let's put that millionaire dream on the back burner for just a second, because there's a much more urgent reason to understand how all this works, a kind of invisible threat that affects every single one of us.
And that threat is called inflation. In the simplest terms, inflation is like a silent thief that makes the money in your bank account worth less tomorrow than it is today. It's this constant, slow-moving force that you have to actively fight against.
Just think about your own grocery bill. Not that long ago, $100 could probably fill your entire shopping cart. But today, that same $100 might just get you a few bags. The amount of money, the $100 bill, it hasn't changed. But its purchasing power, what it can actually buy you, has gone way down.
And this is why just saving your money in a regular bank account is kind of like trying to run up a down escalator. You're putting in all this effort, but you're still losing ground. So to beat inflation, your money can't just sit there. It needs to be put to work. It absolutely has to grow.
So if just saving money means you're actually falling behind, what's the alternative? Well, the answer isn't some super complex, secret strategy. It's about taking one simple, practical step to finally get in the game. I love this analogy because it's so true. You can read a dozen books on how to swim, you can watch videos, but you only really start to learn the moment you actually get in the water. It's the exact same thing with investing. The second you have even a little bit of skin in the game, your entire perspective just shifts. You start paying attention in a completely different way.
And here's how you can do it. It's so much simpler than you think. First, just look around you. What companies make products you already use and trust? Start right there. Second, open an investment account. Modern apps make this incredibly easy. It takes minutes. And third, and this is important, start small. The goal is not to get rich on day one. The goal is to get your feet wet and start your real learning journey.
Okay, so once you're in, you'll pretty quickly realize there are two main paths you can take, and understanding the difference between them is absolutely critical for any beginner.
Think of an investor like someone planting an orchard. They choose strong, healthy trees, which are great companies, and then they give them time, years and years to grow. A trader, on the other hand, is more like a vendor at a daily market, buying and selling produce based on that day's prices. It's a much faster pace that requires constant attention and a pretty advanced skill set. For beginners, the investor path is almost always the best place to start. You've got to build your foundation first. You know, so many people are out there searching for that one secret trick or that hot stock tip that's going to make them rich. But the most powerful tool you have for building wealth, it isn't a secret at all. In fact, it's something every single one of us can develop. It's patience. That's it. This is the single quality that separates long-term success from failure in the market. It's not about being the smartest person in the room. It's about being the most disciplined. Seriously, think of patience as your superpower. It's the thing that allows compounding, that magical force where your money makes more money, to actually work. It acts like a shield, protecting you from making silly, emotional decisions driven by fear or greed when the market gets shaky. And it reminds you that building real wealth is a marathon, not a sprint.
So let's reframe the whole goal here. Forget about the lottery ticket fantasies you see online. Think of this as building something solid, brick by brick, over a long period of time. It's a journey of learning and discipline. So the only question left is, are you ready to take that first step?